Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the Bitcoin market. Before we start the video, we would like to announce the new fundamental report that we have prepared on Bitcoin, so you could find it easily if you will visit on the forum blog part and goes to the Sive Morten blog, and here as you could see these articles that actually BTC fundamental reports that I have made. And this report is dedicated to regulation. So it maybe sounds a bit boring, but in fact, guys, the markets and in general investors are too in habit with regulation term. So because the topic of the regulation have appeared since the market starts trading the Bitcoin on the exchanges, and everybody knows, yes, this regulation, it's needed some stronger regulation or some supervision needs and so on, and so lots of talks around for a few years already. But particularly in 2023, there are really big changes in a regulation background. If you read this report, you will understand what I'm talking about. In two words speaking, the United States regulatory authorities, which is the Securities Exchange Commission, Fed Reserve, taking the real course on the global centralization of the Bitcoin market and put the big limits on the developing of this market and trying to put them under control of the big banks, which in turn significantly easy to control from the Securities Exchange Commission and by the Fed. Would you know, for example, that Fed denies the request for commercial banks to become the part of the Fed Reserve System to get the license on banking operations if bank related to the cryptocurrencies? You probably haven't known that, but this is reality that now stands in the United States. Securities Exchange Commission proclaims its priority in the regulation of the crypto market in 2023. You now could see lots of probes around the Kraken, for example. And on the Binance right now is going some probes. And this is the starting of the big trend on the crypto market that takes the aim to put the limit on expansion of this market. And if you will take a look at this problem together with the really not friendly economical situation for the cryptocurrencies, you understand what I'm talking about. And it will become clear to you why we have really big doubts and a bit skeptic on the massive exciting that you could see currently on this cryptocurrencies market. That's maybe suggests that's starting of the crypto summer, and this indeed rally is starting, and everything returns back to its own. It was before the May of 2021. It was really very exciting performance of this market. We disagree. We think that it's we could accept the pullback somewhere to the 30 even area, but we have the big doubts and we're skeptic on the really bullish ambitions and major bullish reversal on the cryptocurrencies. So if you would like to understand it a bit more and understand what I'm talking about, why we have to this conclusion, you could read this article. So it's not really very big. Now let's turn back to the technical analysis on the Bitcoin market. On the monthly chart, we do not see really big shifts. February has become some kind of the indecision. In the recent few weeks, big changes have happened. First of all, inflation seems to not slowing down, not only in the United States but in Europe as well. So yesterday, for example, euro currency has become the major newsmaker. Central bank in Europe has started the quantitative tightening. Inflation across the European Union is not dropping. So take a look at the January. Germany yesterday was numbers on the France and Spain, where inflation also keep going higher. And all this stuff suggests that in European Central Bank and European Union, the rates also will be raised greater than it was initially suggested. Currently, market speaks about 4%. Also, the easing of the policy also is postponing on the next year, 2024, at the best. All this stuff create the background for the more pressure on the cryptocurrencies, because now you see that liquidity is drying, with trigger demand for the fiat currencies. You see that drying of liquidity and rising rates, increasing rates for public deposits, and it's already, you could see the rates around 3.5-4% United States for deposits for the population. Yields of the treasuries are rising above the 5% in the short term, while the risk premium for the S&P and the stock market is decreasing, which also makes a pressure on risky assets and non-bearing assets. And Bitcoin currently is just a part of all this mess, and also will be under pressure in the nearest term. That's why we do not treat this action as something big. That's where we'll get something of this sort. Yes, some pullback, maybe slightly higher at best. We could retest the 30 even area maybe, but I'm not sure that this will happen at all. And currently, as you can see, that February has become an indecision month on all this background. On the weekly chart, everything goes with our plan. We're still watching for these head and shoulders, and that is starting point of the right arm. So we just will be watching for a long-term perspective when the market will reach back the 20,000 even area, where we think whether it makes sense to take the long position or not, what patterns will be formed around it, because as usual, hand shoulders also works like the great indicator. If it fails to start moving higher, it fails to work, it means that the failure of the hand shoulders means bearish background, and it means that market will collapse to the 2023 area, as we already talked about this. Now, in the shorter term, on the daily chart, all this news around the central banks and inflation, take a look what we have on the daily on the cryptocurrency. Market is forming the bearish flag. Trend remains bearish. So mostly the trading plan that we discussed last time on on Monday this week is still working. Nothing has changed. Market has shown minor retracement here to the resistance areas you will see on intraday charts, and still stands flat. So the suggestion that you could take short position with the downward continuation initially at least to the 2150 still valid. So currently we are not considering any bullish positions on the cryptocurrencies. On the 4-hour time frame chart, that's the pattern that we are watching. Initially we suggest that it should be dropped back to the neckline. Then if market will not break it directly down, we will consider this larger pattern where you also could try to take the short position with the right arm top if it will be formed. But initially, right now, we're watching just for downside continuation to the neckline. On the hourly chart, you could see how situation has changed since our last discussion. If you remember, we talked about this confidence resistance, 2357, 2376, and market at this moment was at this point. So it has completed this ABCD OP, and if you remember, we've got here this catalyst triple to sell and said you probably could try to take the short position from this confidence with a stop somewhere above 618 level, suggestion that market should drop further. As you can see that the XOP of this ABCD pattern stands around the neckline on the daily chart. Market has spent a bit more time around this resistance, showing this gradual choppy pullback, but this is, guys, still the retracement. So we could just the flag that I have shown you on the daily chart. And with this fluctuation, with this upward direction, market was able to touch the XOP as well. So now I suppose the retracement with a high degree of the probability is over. So if somehow suddenly this, as we said, if you remember, 2420 area will be broken up, in this case we could speak about bullish performance and further upward direction. If you remember, we talked about the possible free drive pattern instead of the head and shoulders. So if market will drop it back and keep going higher, we could get this first drive, second drive, and maybe third drive to the 26 target. But currently we do not have it, and based on the performance that we see here, small chances that we will get direct downward continuation. So let's see what we'll have. That being said, as a conclusion, bulls should wait either completion of the XOP around 22 area, 21, 22 area, or upward breakout of the 24, 23 resistance, which suggests the action to the 26. That's the only background for the bulls. For the bears, you could consider current level for possible position taking with the stops somewhere about the XOP, or maybe place stop about the 618 level here. It's the same as we discussed last time.